The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. Welcome to the Lemonade Car Show. I'm your host, Lorraine Sommerfeld. We're brought to you by OMVIC, Crown, Hotspot Auto Parts, and Sound Insurance. I'm joined today by Debbie Arnold, who's with Sound Insurance, and Ron Corbett, who is with the APA.
Hello.
Welcome, both of you.
Thank you.
This is our insurance show. Every time we have an insurance show, it kicks up a whole bunch more questions, so we're going to be taking those questions in the following couple of segments. Right now, Debbie, what's new? What's going on? It's always a crazy, crazy industry.
It is, and it's getting crazier. Unfortunately, the results for insurance companies over the last, 2018, 2017, were not good in Ontario Auto. So rates are going up yet again. We're looking at an overall increase of about 8.6%. Which is painful. The rates in Ontario
all told they were going to come down.
Yeah, well, we were told that in 2016, and
yeah.
that was a political move by the Liberal government to get themselves reelected. That was a problem.
Yeah.
But now we need to look at fixing the issues in Ontario Auto, and until they're fixed, rates are going to continue to climb. You have massive amounts of fraud. Auto repair is that much more expensive. Distracted driving is 8 out of 10 losses are caused by distracted driving.
That's a brutal statistic.
That's a brutal statistic.
8 out of 10 distracted.
Yeah.
That's
So I'm very thankful that the
new law.
regulation as of January 1st, it's stiffer penalties, it's a 3-day suspension. Hopefully that will start to remove the problem. People don't want to be unlicensed for 3 days or not being able to drive for 3 days, so put down your phones, put them in the back seat, put them in your purse, don't use them, period.
There's so many apps that will tell someone you'll call them
Exactly.
in 10 minutes or
Exactly.
something.
Well, my car, I could just hit, reply on my steering wheel to say, I'm driving right now, I'll call you later.
And the thing is, don't call someone you know is driving.
Oh, exactly. Well, I mean, with how much I'm on the road, clients call me all the time. So I'm thankful for Bluetooth, but use Bluetooth or don't use your phone at all.
Yeah.
I miss the days where you didn't have a cell phone and you had to actually get
I don't
physically
boot
to a
them
place
up
to
because
call.
I can't be bothered. But the rates, and I got a study came through to me, and they said, "Oh, look, the rates are going down." Then I read it, and they're not.
No,
and I
they're
called
not.
them and said, "Where's the spin coming from? This is not the headline matching the piece." I said, "I'm not writing anything about this. It's
No, the
lying."
rates aren't coming down. And actually, underwriting guidelines are getting very, very tight. So our capacity to write business is shrinking because insurance companies are saying, you know what? You have to limit what you're writing in new business because we can't grow right now. We're not making any money. They're losing. They're paying out about $1.02 to $1.20 for every dollar they bring in Ontario auto insurance. And please put things in perspective here too. 44% of the property casualty market is coming out of Ontario. That's out of the entire country. $50 billion worth of premiums for the entire country, and 44% of it is coming out of Ontario. So that's going to impact rate across the board. So we're having problems with severe weather. First 5 months of 2018, the insurance companies paid out almost $2 billion in Ontario alone, let alone BC wildfires, et cetera. And although you may not think that has an impact on auto insurance, of course it does. When there's a flood, vehicles are affected. When there's windstorm and branches are falling on cars, it's affecting. So severe weather, distracted driving, complex auto repair, it's all having an impact on rate.
brutal.
It's horrible.
Now, if we've got viewers though that do have insurance questions, the APA does have a service that they can help them with.
Yeah,
correct?
so as part of your membership benefits, you have access to Debbie at Sound Insurance, and you can call
Boy,
her.
that's really well put in.
You get access to Debbie for insurance purposes, and you can get a quote from her based on a discounted rate.
Yes.
And the rates are based on a group affiliation. So
send everyone to Debbie.
it's really good. Actually, yesterday someone called and said that they talked to Debbie and the rate was so good he was joining up. So,
Yeah.
so that's good.
That's good. I had someone complaining about the rates in Brampton, and she said it's not fair. It's not fair. It's not fair. Where you live has an impact.
It does, because
on your
and this is a controversial issue right now. There is a paper or law before Parliament right now to remove territory discrimination,
Talk
as they're
about trying to
calling
get
it.
elected again. Yeah.
Yeah, well, and the problem I have with that is that the claims are, the reason the rates are set so high in Brampton is because the claim severity there is that much higher. It's triple what it is in the rest of the province. Exactly. So if you live there, you're more likely to get into an accident. Unfortunately, there's more stage collisions in Brampton than anywhere else. So when you have that much more being paid out, that area is going to pay for it.
It's like my kids' rates at 18 being higher for 18-year-old boys. That's where the payouts are going. And why should people in Sudbury have to subsidize?
Well, and that's it. But I mean, there's the other side of the coin argument where you're spreading risk. So rural Ontario drivers are going to pay more to supplement Brampton drivers. Personally, I don't think that's fair, and I don't think that's an intelligent way to move forward. I think what we need to do is fix the delivery of the system, so there isn't as much fraud. I think we got to get lawyers out of the equation, and the reason the lawyers, as they claim, they're in the equation because the system is so complex or claims are getting denied. But the fact of the matter is 35% is going to the lawyers.
So chicken and egg. We'll be back with more Lemonade Car Show right after this break. The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. Welcome back to the Lemonade Car Show, brought to you by OMVIC and Crown. I'm here with Debbie Arnold from Sound Insurance and Ron Corbett with the APA. We've got insurance questions, Debbie. Are you ready?
I am ready.
Let's go to the first question.
My name is Wendy. I'm from North Bay, Ontario. I would like to know, what are the consequences? Because down here, a lot of people are driving without car insurance. So I'd like to know that. Thank you. Bye-bye.
Oh, that's a really good question. And that's
And she doesn't sound like she's planning to do it, but in Ontario, you are required to have car insurance.
It's mandatory. You must have at minimum $200,000 liability insurance, which isn't near enough. You need $2 million. If you get caught driving without insurance, it's a $5,000 fine for the first offense.
And police love
that. They love that. It's a nice big kick in the bucket for them.
They really like that.
And the second offense is $20,000. So don't do it. It's not worth it.
It's not worth it.
Although I do have clients that, you know, in the GTA where I have to quote them $8,000 or $10,000 because of their driving records. I tell them to park the car, take Uber for a year, let their record clean up. But not driving without insurance is a big no-no.
And the reason it's so steep, the fines, are because you're jeopardizing everyone else on the road.
It's not only that you're jeopardizing, it's financially you're jeopardizing everybody, because if you do get into that accident or you hit somebody, it goes to the uninsured motorist fund. For if you've hurt them, they're going to sue the uninsured motorist fund, and that's a huge cost to the consumer. So that's why the fines are so steep.
Okay, so Lindy, I'm sorry about the people that are surrounding you up there, but let them know how steep the fines are. A lot of people aren't aware. First one out, $5,000.
Yeah.
Let's go to the next call.
Hi, my name is Sam Kumar. I'm calling from Waterloo, Ontario. I had a single car accident, slipped on black ice. The insurance company is saying certain damage and repair work is to be done, but my actual dealer tells me a lot more needs to be done. The difference is about $5,000. I just wanted to know how to go about approaching this issue. Thank you.
So that's a twofold question, actually threefold. So first of all, sliding on black ice is a single vehicle collision. It's always going to be considered at fault and always going to be under collision, and it's subject to your deductible. If there were two vehicles involved in that loss, each insurance company takes care of that vehicle's own damage. So, and a lot of people aren't clear about no fault. No fault does not mean it's nobody's fault.
Please, people.
There is fault.
That's why I won't use the word accident. There's no such thing as an accident. There's only collisions and crashes.
Exactly. In this case, where the dealer is saying something different than what the insurance company is, every policyholder can go get their own independent appraisal and put that forth to the insurance company. And the insurance company, even if the gentleman has a broker, the broker would argue on his behalf, here's the independent appraisal that the insured is paid for. This is what needs to be done to fix the car. Now, there are some times where you have to manage the client's expectations where they think that every scratch on the car is going to be fixed, even though it has nothing to do with the accident. We see that a lot, and that's actually part of fraud.
Yeah.
Where, you know, you're claiming for more than what was actually done to the vehicle. We have those instances all the time. So you have to understand what is actually allowed to be fixed under the policy. It would be the damage specific to that collision. If there was pre-existing damage, that's not going to be fixed.
And appraisers know. Appraisers are pretty good at knowing.
Well, yeah, if something's obviously happened 6 months ago or a year ago, well, they know for sure.
Exactly. And I think that's another part of the problem in Ontario is this sense of entitlement, you know, or you hit me, so now I'm going to get everything fixed on my car.
Well, we think everyone else is getting everything.
Exactly. Well,
So
yeah,
it's like,
that's not the
I'm
case.
paying because you're all getting stuff. This is my chance. I left a laptop in the back. I left a camera in the back. Like, that's where this crap comes from.
That's a lot of that. And by the way, contents is not covered when it's a collision loss and it's at fault. Your contents, damage to your contents is covered if somebody hits you and it's 100% their fault. Then under direct compensation property damage, contents in the vehicle is covered if it's damaged. If it was a collision that's your fault, that you created the single vehicle accident,
Your computer's not covered?
it's covered under your property policy, not under the auto. And people aren't aware of that.
Well,
so.
no, well, it's not complicated or anything.
No, not at all.
But a $5,000 discrepancy for the gentleman that called between the dealership and the appraiser, you know, we're going to come back and talk more about this because that is quite a big range. So we'll be back after this with more Lemonade Car Show. The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. Welcome back to the Lemonade Car Show. I'm your host, Lorraine Sommerfeld. I'm with Debbie Arnold from Sound Insurance and Ron Corbett from the APA. Before we went to break, we're talking about a $5,000 discrepancy between an appraisal and a dealership. Ron, what do you think that might be attributed to?
Well, as Debbie said before, it could be just pre-existing damage. You know, someone backed into a pole like 5 months ago and never got it fixed, and they think because their black ice incident ended up with the front end being damaged, that the back end should be damaged as well, but it's two separate incidents.
Okay. And if he is right that it's only a damage caused by this, he can ask for another appraiser, an independent
He can get an independent appraiser.
Okay.
He'd have to pay for that.
Yeah.
But if he presents it to the insurance company, then he can negotiate with the insurance company.
Okay, and at $5,000, that's
That's a big.
yeah.
That's unusually big.
Yeah. Okay. Let's go to our next call.
Yeah, hi, my name is Merv Farrell. I'm up in Fort Perry, Ontario. I have 3 cars. One of them is a Corvette, the other one was a minivan, which I do not use during the winter. But yet now my insurance company charged me for the full year and keep my money for the year. And I only use the vehicles for 6 months. If you could give me a call on that, I would appreciate it.
Okay.
Okay,
I remember
so-
this used to be a thing and they changed it.
Well, they changed it if you have a single vehicle on the policy and you're removing coverage in the winter months. You can't do that anymore. You suspend the coverage. You don't take everything off except fire and theft. You can't do that on a single vehicle policy. But Merv's saying he has a couple of vehicles. So it sounds like he switches the Corvette for the summer, the minivan for the winter, and he should still be able to do that. When you have more than one vehicle on the policy and you're keeping liability on at least one of those vehicles, you can put fire and theft on it. It could be some weird rule with his insurance company, but any of the ones that I deal with, as long as there's a vehicle that has full coverage on the policy, the other vehicles we can switch out for winter, summer use.
So maybe
That's
he needs
fine.
to talk to a broker to get some more up-to-date
Probably,
information.
probably.
Sounds
Broker is your best insurance solution.
Oh, she always says that.
But it's true.
We'll give our wonderful broker another question.
Hi, my name is Conrad. I'm about to buy a new car. I have a 2010 Honda Civic. I'm about to buy a 2019. How much can I expect my insurance rates to go up? Thank you.
That's a really good question, and it's a common question.
I saw rates go down.
They can
on a,
right now.
Yeah.
Let's qualify that with currently.
Yeah.
Newer vehicles tend to be less expensive than older vehicles because of the improved safety features. So when the VICC did all the rates or the grouping for vehicles, with the safety features, they're showing a lower rating on those newer vehicles. However, what the insurance companies are finding is that it's more complicated and more expensive to fix a newer car now. So for right now, I would say he may see the same premium, if not a little lower. It might be a tad higher if he didn't have collision on the 2010.
he doesn't need to be anticipating
Exactly.
a huge
It
jump.
shouldn't be a
Yeah.
huge difference. If there is any difference, it would probably be if he had collision or didn't have collision and then he's putting it on. He also wants to make sure that he gets limited waiver of depreciation or replacement cost on the new vehicle. So that might cost a little bit more, like we're talking $75 a year. But having said that, with new rates coming down the pipe in the next few months, you may see an increase in the physical damage section
Well, that's,
for those
Yeah.
vehicles.
Ron and I have seen that. We drive
Yeah.
a lot of cars, and you know they're getting more complicated.
Oh, just
and the computer components, you can't fix them.
No.
It's
No.
like
It is.
$10,000. And if the airbags have gone, a
Yeah.
lot of cars become disposable in a certain price range. If the airbags have gone off, it's not worth
and
it to fix it.
all the safety stuff now, the adaptive cruise control and everything else, a lot of the stuff is packaged in the grille of the car, and if the grille of the car gets damaged, well, you know, it's going to be very expensive to fix.
And what you also have to consider is that the safety features are helping you not get into an accident.
That's true.
That doesn't mean that somebody can't hit you. So, and then again, I also don't think that the sensors are as good as what they're touted to be. I mean, I know myself, I have forward collision warning. There's nothing in front of me and I'm getting the warning. Thank God I don't have automatic emergency braking.
Or also our great climate. I've been out sleet
Well-
or snow. It's like not working anymore.
Yeah.
So you
You
still have
just
to go
get
to the
you just
driver
get this
and-
flash on the dash. Yeah, sorry.
it does. It does. It pops
Exactly.
up. It's like you're beat. So yeah, no, it's true. So yeah, so they're safer, but there's a lot more stuff to fix.
There
and
is.
there is a sooner breaking point where companies it's not worth the fix. So
Exactly.
we'll be right back with more Lemonade Car Show. The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. The Lemonade Car Show is sponsored by OMVIC, Ontario's vehicle sales regulator. Welcome back to the Lemonade Car Show, brought to you by Crown, OMVIC, Hotspot Auto Parts, and Sound Insurance. I'm here with Debbie Arnold from Sound Insurance and Ron Corbett from the APA. We have more questions from viewers. Insurance is a hot topic. Let's take the next question.
My name is Veronica. I have a question about our insurance refused to pay a car that someone hit me. Keep it in the body shop for 2.5 months, and then did not fix my car, and they raise my insurance $124 a month. I'd like to know if I should take a lawyer or not. Thank you.
Okay. So.
There's a lot in there.
There is a lot in there. So first of all, for the company to keep, or for the body shop to keep the car for 2.5 months, would suggest to me that maybe there wasn't collision coverage on the car, or she said somebody hit her.
Somebody hit her.
Somebody hit her, it would be under direct compensation, so it would be no fault. They wouldn't raise her rates for the if it's a not-at-fault loss. So there's something about the loss. I wouldn't consult a lawyer until I, one, spoke to my broker, and if she doesn't have a broker, it's an agent, then I would go to the ombudsman of the insurance company.
Okay.
There are steps to take, and every insurance company has a complaint process. So first, if you're not happy with the adjuster, you go to the claims manager. If you're not satisfied with that, then you can go to the ombudsman's office. And on every website for every insurance company, they have the information about the ombudsman, and I would contact the ombudsman to look into it further. There's something wrong there. If it was a non-chargeable.
Yeah, if it was something that was Because even though, even if she were not at fault, her company still has to get word from another company that their client was the one responsible for the accident to fix it under DC, right?
Or
Wonder
if
if
it
it's
was a
hit
hit
and
and run. I mean, she
Yeah.
said she
Yeah.
didn't mention if it was a hit and run, when you can't identify the third party, it goes under collision. If she didn't have collision coverage, there would be no compensation there.
So that could be
So
where the
that could be
metaverse
it.
is. Okay.
There's a lot in there, but I leave the lawyer as a last resort.
Veronica, write out line by line what has happened in the time frame
Yeah.
and the dates, and then find the ombudsman for
And
the company.
yes, and-
But if it's clear like that, you send it to them, and then answer their questions from
Yeah.
there. But you've got to go through the tally of.
Yeah,
Through the
and
steps.
hiring a lawyer, I think, is premature at this
Okay.
point.
Yeah, it'll get more costly than.
Exactly, and I would go through the steps first.
Okay. Hope that helps you, Veronica. Let's go to the next question.
Hello, my name is Sean. I'm calling from Niagara Falls. I was just wondering about insurance rates for modern classic cars. There's not really any company in the Ontario that does the classic car insurance. I see a lot of the insurance companies are pushing you away to Haggerty over in the U.S. Now, is this not a market that you guys are interested in getting into? You know what I mean? Generally, all the classic cars and modern classics are well taken care of, and people are babying these cars. They don't want to make insurance claims, so it's basically just given the insurance and provide a good price, and most people will never use it. All right, thanks, bye.
Where he's calling from the Golden Horseshoe, a lot of classic
Yeah.
car clubs, a lot of classic
Yeah.
cars. Hi, everybody. I know you used to have to go down to the States for stuff, but you.
No, Haggerty was actually purchased by Aviva, so it's run through Aviva now in Canada. We have plenty of, clients that we're placing with Haggerty. The rates are lower; it's much better coverage, but there are certain parameters that you can insure with Haggerty. So you have to be licensed at least 10 years. There can't be any underage occasional drivers in the household. Pretty clean record, no more than 2 tickets. And you have to have a daily driver. You must have another car that you're using regularly, not the classic car. If you're not meeting those guidelines, most insurance companies do have an antique or a classic rating, which is a lower premium for those cars. It's more expensive than Haggerty, but it's still an option. When you have to go through a regular market, aside from Haggerty, you need an appraisal on the vehicle. The premium is about 50% what your standard vehicle would be. And they're very particular, like it can only be for shows, exhibition, the odd Sunday drive. So it's a limited usage policy. When we get into the modern classics, like if you're getting into a vehicle that's under 20 years old or under 25 years old, then the regular markets are going to write them as a regular vehicle, whereas Haggerty will take a look as long as it classifies as modern
Specialty.
classic.
Okay.
It has to be specialty, low production type vehicle.
Okay, so Sean, there are Aviva.
Aviva is doing the Haggerty
So it is,
business
yeah.
up here, so it does exist. Haggerty does not exist solely in the States. Their
there's-
hub is down in the States, but they're here.
We have
so.
a Canadian arm here that can
That's right.
sort out the classic cars. Okay,
That's
I
right.
hope that helps you, Sean. That's all the time we have for Lemonade Car Show. I'd like to thank my guests, Debbie Arnold and Ron Corbett. Insurance, as always, hot topic. I hope we answered a lot of your questions today. From Umbic Crown, Hotspot Auto Parts, to Sound Insurance, I'm Lorraine Sommerfeld.